I sure can.
All right, guys, I really appreciate you joining us here today. I appreciate the opportunity to speak with you folks. Hopefully in the very near future, I won't blow this so bad that Karen and Jim will ask me to come out there and visit with you, one-on-one personal visit. So let's go ahead and get started. Got a lot of stuff to cover. I think today they want to cover our Medicare supplement product and our hospital indemnity product. Two very, very good products that I think when you see what we offer, you'll see that it does separate us from a lot of the competition that's out there. Of course, with MedSup, a Plan F is a Plan F, you all know that, and it does come down to rates. So here are I know you guys are a national marketing company, so you know the products that we offer are A, F, and N. Unless you are in Missouri, we have a Plan G there also, but primarily for most of the states that you guys are going to be selling in, you'll have an A, F, and an N. And then as the insurance gods bring us to rate increases, we might offer a Plan G in a lot of different states. But we've got a lot of things on the drawing board that we won't talk about here today that hopefully this is a long-term partnership. That's kind of what we want, and we can share those things later on. Okay, just going to run through a couple competitive comparisons in the state of Pennsylvania. If you look at Equitable's rates, we're at 118. Aetna is a good business partner of ours. We're at 118.63. And you can see they introduced their rate a little over, well, about a year ago. We introduced ours in April of last year. And as you go on down through there, you see that those two at the top are pretty competitive. And when you go over to age 72, we're there within $4 or $5 of one another. So great process. And when we talk about our Express app here shortly, I think you'll see where that does give Equitable an extremely good competitive advantage over some of the other companies out there. I'll give you a couple of scenarios how you can use this to your sales background benefit. And again, if you have questions, type those in and we will make sure that those do get answered on some format. Now, before I move on, these are all age 65 female, non-smokers in the least expensive area code factor in each one of these companies. So it's a very fair comparison right down. Everybody's compared at the same level. In North Carolina, we get a lot of business out of North Carolina, guys. I'm telling you, our rates are just extremely good. You look at us compared to American Continental, they're coming in at $119. We're $15 a month less than that. You go across the board, it gets a little tighter, but the thing that we want and what I have always discovered, I started selling Medicare supplement insurance back in 1984. And I still get out and sell today, not near like I used to. I don't have time to get out of this office. It's kind of my salvation sometimes, getting out of here and getting out in the sales field. But I feel like as long as I can get out there on a regular basis, I can stay, you know, current as to what you guys run into on a daily basis. It keeps me sharp. It keeps me humble to work for you guys, to help you any way I can. And I think that's so important when you do webinars, that you have a way of saying, yes, guys, I do this also. And, you know, I've always found that's been very beneficial when I do these types of things. So in North Carolina, 105 versus 119. As we all know, there's about 10,000 people a day turning 65. That's where we want you to be competitive. We want you to be able to get a hold of that guy that is, or gal that's turning 65, so that you can have a client for a long time, not just, you know, a year or two. And I think that's important in this business. You know, the referrals and residual business is so important to you and I as salespeople. South Carolina, we're at 105. New Era's at 120. They get a lot of business out of there. They introduced their rates right before we did. As you can see, most of these rates got introduced in January, February. Then Mutual of Omaha introduced a new rate on July the 1st of this year. We introduced ours on the 25th of this year. And as you take a look down there through the rates, you can tell that definitely very, very competitive. And I don't have time to go through all these rates, but I'm just going to buzz through a few that are close to where you guys are out there, so that you can see, yes, these rates are very good, and they are that way throughout most of the country. There's a couple of states that we're not competitive in, but you know, there's reasons for that, and I can explain that when I come out on a personal visit, but for time's sake today, I'm going to move right along. Okay, here's one of the things that is so beneficial to you and I, especially in certain times of the month or in certain situations when we run into that when we're selling, and that's our Express app process. So what I want to talk to you about here this afternoon is I want to introduce the Express app process to you, tell you why that's a very, very good thing for you to do, give you the mechanics and the processes of both kitchen table selling, which is what I grew up with, versus a remote selling situation is what a lot of companies are doing today, or a lot of agents are doing today. Is you may live in Pennsylvania and sell an insurance plan in Texas, or you may live in Iowa and be selling a plan in Nebraska. A lot of guys are doing that. We've got a company that works with us here in Kansas City that they wrote $500,000 in premium last month, and not a single plan was sold face-to-face. It was all over the telephone. Now, that's not us as Equitable. That's an insurance agency that we hired or we brought on board, kind of like we're talking to you here today, as far as showing them the opportunity through the phone sale process. You know, there's companies out there like Select Quote. They're out there doing everything over the telephone. And in today's world, anytime you can save a dollar, that adds to your bottom line. Okay, so I get asked a lot, is this the same thing as a drug screen or a pre-qualification call? The answer to that, guys, is no, it is not. This is not an e-application process. This is a process that where when you call and say you've sold a policy in the home or over the phone, you actually can get on the telephone, dial up our underwriting department, and at the end of the telephone call, you know whether that policy is approved. You have a policy number in your hand. The client gets to hear these things. I'll show you how I go about doing it here shortly, so that the client gets rid of a lot of buyer's remorse when you do these things over the telephone or in person, but they get to hear, you know, hey, Bill, your client's approved, your policy number is 2896344, and I'll show you how I do that when I go about doing this. So every now and then somebody will say, well, that's the same thing as an e-app, isn't it? And I said, no. If you do an e-app, you got to email that to the insurance company. So you write an app on Friday. By the time you get it into the insurance company, they're probably not going to work Saturday or Sunday. By the time they get it into their work schedule or into the work queue for underwriting, it may be a week, 2 weeks down the road before you actually know whether that policy is approved or not. So we're talking about as soon as your phone call's over, you have it, yes or no. So to me, that's beneficial, and I'll give you a couple examples here shortly of why I think that's huge to you and I when we're out in the sales field. Another good thing about doing it this way is it's mistake-free. You do not have to fill out the app unless you're doing a replacement on a fully underwritten case, and then we're going to need a replacement form. But everything is taken over the telephone, and your underwriting department cannot move from the first part of the app into the second part of the app unless every required field in part one is filled out. It will, you know, it'll give her a block. It'll make her go back and say, oh, you missed the Medicare number. You got the social, but you didn't get the Medicare number, or something like that. So it's mistake-free, and after 30 years of that, I know a lot of agents that this benefits greatly when you see some of the apps come through. But no paper except in a replacement form or a guarantee issue form. We have to have proof of a guarantee issue. Our application has been very simplified. We're looking at about a 96% issue rate. If you're doing an open enrollment or guarantee issue, you can expect about a 15-minute process, start to finish. If you are doing a fully underwritten case, I always tell people to put about a 10-minute more window on there, because we do have to verify the health, and we also have to verify the medications. You may have somebody taking one medication. You may have somebody taking 5. So that all adds to the time. Company-wide average is about 23.5 minutes. But if you're doing open enrollment guarantee issue, you eliminate 2 of those processes, and we can get that in and out in about 15 minutes. So what I'm saying to you, we're about as close to a guaranteed issue Medicare supplement as you will ever see. The only thing we don't do is just put it right in your hand right then and right there. Okay, so immediate results, which I think, what I mean by that is it's going to be better for you, it's quicker for your client based on things like, have you ever written a Medicare supplement policy on someone, send it into the company, you process it at your office, you mail it into the insurance company. 2 or 3 weeks later, you get the letter from the insurance company or a call from an email or something. They say, you know what, we're going to have to decline that piece of business. So that creates challenges for you and I as salespeople. First off, we have to go back and sell the same dirt that we've already sold. So conversations sometimes go kind of like this. Well, you know what, Bill, been about 3 weeks. I hadn't heard anything on whether I'd been approved or not, so I just went ahead and I paid my other premium. And I really appreciate you trying to help me, but I think I'll just stay right where I'm at. I've had that happen countless times in my career before we got to the Express app process. So doesn't it make sense to you and I, if you're doing kitchen table selling, that we get the underwriting department on the phone and they say to you, no, that's not acceptable? At that point, you can reach back into your kit and pull out another company that you offer that maybe is a little bit more flexible in underwriting. That saves you having to drive back, rescheduling another appointment if you even get, the chance to reschedule that appointment if they don't blow you off. So if I'm going to get a bad result, I want to know it now so that I can go from plan A to plan B. So that's what I mean by immediate results, better for you, giving you a lot more flexibility. Now, guys, here's a huge benefit that a lot of people don't realize they can take advantage of. Today is September the 19th, so if I pull my calendar up and go down the road about a week to September the 26th, say that you are sitting there talking to your insured, and during your warm-up period you've discovered that they've got XYZ company and that plan is getting ready to go up by about $15 to $20 per month on 10/1 of this year. Tell me, can you take an app, mail it into the company, and have an underwriting decision in 3 or 4 days? And 2 of those days are Saturday and Sunday. You and I both know the answer is no. But in our process, in our system, if you hit that situation, and you will, you can actually say, well, Ms. Jones, let me ask you a question. If I can get you an answer right now as to whether you're approved and even put a policy number in your hand, would that help you make your decision here today? When you frame your argument like that, I assure you you're going to get the opportunity to call the underwriting department and see if they qualify. So at that point, you can pick up the phone, and let's assume this goes good, they get approved, and they give you that policy number. You can then very confidently have her grab her ID card from XYZ company, flip it over on the back, get that toll-free telephone number, and say, Ms. Jones, let's just go ahead and get your other policy canceled because we don't want to double draft you in October. And you call the insurance company on the phone. She'll have to give you authorization or give them authorization to talk to you, and just simply say, this is Bill Ellsworth. I'm an insurance agent in the state of Pennsylvania. I'm sitting here with Mary Jones, and your latest price increase is more than she can handle. She's going to want to go ahead and cancel that. Don't draft her bank account in October. It's that simple. When you walk out the door, if you're kitchen table selling, when you walk out the door, there is no buyer's remorse on her part. You've done everything she needs to have you do. She knows that she's got a new plan. She knows the effective date. She knows the premium. She knows her policy number. She knows her other plan's been canceled, and she's not going to have to pay 2 drafts. So that's what I mean by flexibility, guys. This is a huge benefit to you and I when we're out selling and we run into those situations. And I don't know if anybody's selling a Medicare supplement that hasn't run into a situation kind of like that. Again, this is a great way for a company to create a business model over the telephone. Gives us better returns on our time. Just as an example, yesterday I did a webinar for an agency out in Arizona, kind of like what I'm doing for you here today. When I got done with that webinar, I live in, as Jim knows, I live here in Kansas City. If you go south to the Lake of the Ozarks, that's about an hour and a half from here. And I have a client down there that I wrote on Christian Fidelity about 12 years ago. That premium now is getting up way expensive. I picked up the phone, called her. In about 30 minutes, I had her converted to the Equitable plan, and that saved me an hour and a half trip down, probably an hour and a half in the home, and an hour and a half back. So what would have took me almost 5 hours to accomplish, I did in 30 minutes. That gives you such a much better return on your time. It lets you touch a lot more people and keeps you out there in front of more prospects, building your business. It only makes sense that if I can approve a plan today and a draft goes through in the next day or two, I'm going to get you paid quickly. We're looking at about a 5-day turnaround for commissions as far as getting the business turned and paid. Again, that's 5 business days. Saturday and Sunday doesn't count. And we have a lot of guys that have a big block of business and maybe looking at a 25% rate increase. They can touch a lot more people by using the Express app process. So it's a great, great system for us as agents. Now, I'm talking a little quick here today because I got a lot of stuff to cover and not a lot of time to do it in. So some of this stuff I'm going to buzz right through, and some of it I'll spend a little bit more time on the important parts. So kitchen table selling, that's what I grew up with. That's what probably 80% of all the business is still done. And then we have the remote selling, to where guys are sitting in a call center or maybe in their office, smiling and dialing and putting business on the books over the telephone. Okay, so there's a 4-step process. Now I'm going to back up and cover each one. Number one, and by the way, Karen, I can email all of these slides out to you as I go through them. So like I said, I can buzz through these fairly quick and then get them in your hands. But first thing you do on kitchen table selling, of course, you got to make the sale while you're in the home. You're going to call our tele-underwriting number at 866-551-1781 and complete that application. Once you call our underwriting department, we will complete on our end, complete the application, and we will issue that policy. Now, the mechanics is basically, again, you call in, you complete the agent process, and the tele-underwriter is going to ask you for the following things as far as verification as you as the agent. She's going to make sure you're appointed with our company first and you're licensed to sell in that state. Now, that's not such a big issue. If you just sell in your domicile state, most agents do keep their licenses current. But sometimes when you sell in multiple states, like I'm contracted in about 40 different states, and these companies will send out that renewal notice sometimes 45 to 60 days in advance. Well, I'm not going to give them my money any quicker than I have to, but sometimes I forget to pay one of them, and I'll call up to do an app, and they'll say, well, Bill, your license is not up to date in that state, and that's a quick fix, but we can catch that once the agent number is disclosed. So it's a little bit more of an issue for the guys that are selling in multiple states versus the guy that's in the domicile state. They're going to ask you your applicant's name, what you want or need for an effective date, what do you want the date of the bank draft day to be, do you want the policy sent to you or the client? I always have it sent to me. It's just my preference. It gives me a chance to reach out and speak to my client again. And what city and state that application is taken in, the name of the carrier that you're replacing, and make darn sure that you read the important statements located on page 3 of the application. Basically what we're asking there is, does your client know, have you disclosed to them, Ms. Jones, you don't need more than one Medicare supplement. You may want to check with your existing coverages to make sure this is in your best interest. And should you become eligible for Medicaid, there's 4 different steps there that apply to each one of them. Now, we're not going to read that to them. We just want to know, did you read it to them or show it to them? I always tell agents when they're doing the Express app, when they get to that portion, the correct answer is yes, and they'll move right along. Okay, at that point, they're going to say, Bill, go ahead and put your client on the telephone. Okay, now all they're going to do right now, guys, gals, is they're going to start filling out the application. We're going to start in part 1, where is all the personal information located about name, date of birth, social security number, how tall are you, how much do you weigh, your verification of their address, city and state, and a good telephone number in case we're cut off or should we need to call you back. At that point, they will move on to the plan selection. Are you wanting an A, F, or an N? Where are claims to be paid to? Always have them paid to the provider. I don't know why we have that on the app, but they do. It drives me crazy. But just check provider. They're going to find out whether you're dealing with a smoker or a non-smoker. And then they're going to move on to the Medicare and insurance information. That's where we have to fill out things such as, in the last so many days, have you been involved in a Medicare Advantage plan? Yes or no. If you have an existing Medicare supplement, are we going to be replacing that? Yes or no. Did you just turn 65 in the last 6 months? All those questions that you guys are used to seeing on every company's application, that's what we're asking now. Covered by A and B, if they are, the effective dates. If they're not, what will be the effective date? Are they on Medicaid? Will Medicaid pay the premiums? Do they have another policy in force? If so, the name of that company and the paid to date. And the underwriter at that point will probably stop and read the HIPAA statement because we're getting ready to go into the health questions. And we can't do that until we disclose HIPAA. Now, if you guys have seen a HIPAA statement in the past, you know they usually, most companies have an 8-inch by an 11-inch sheet of paper full of words. We have that HIPAA statement condensed down to about 6 lines, takes about 15 seconds to read, approved by all the various departments of insurance. We've been doing the Express app now for over 4 years. And by the way, I was the guinea pig for the project, and trust me, it has got a lot better since it was 4 years ago. At that point, we're going to move right through the health questions. I'm going to put that app up here because you guys need to understand how our app works. The first 5 questions are knockout questions. So ask and get information on each one of those. I have a couple highlighted in the past 2 years on question number, in the first part of the question number 2, I highlighted there. It says, in the past 2 years, have you been hospitalized more than 2 times? Not 2 times, more than 2 times. So if they've been in the hospital twice, that's okay, but if it's more than 2, that's a knockout question. So I always ask, if they say, well, yeah, I think I have, then I make them start disclosing stuff to me. Let's get the dates. It may be past 2 years, or you may be talking about a hospitalization that was actually an outpatient, because seniors are going to be really honest with you, and they're going to try to tell you every time they've been out to the hospital. Your conversation may be like, about 3 months ago, Bill, I was out there and I had pneumonia, and I was out St. Luke's for three nights. Right about a year before that, I had you know, some things that I had to go in and have taken care of. I was out there about 2 days, and then I had cataracts removed right before that. Well, bingo, the cataracts, right, I was an outpatient. So that's what all I'm getting at is dig in, do a little personal underwriting to make sure you don't shoot yourself in the foot and miss a sale that you could actually have placed. Okay, then you come down to the additional questions where it says check yes or no for each question. It says, have you been diagnosed or treated for diabetes, including diet control, oral medication, or treatment with insulin? Prior to introducing these new rates in February of this year, all diabetics, we moved to our standard rate. When you look at our rating sheet, we'll have the ultimate rate, which is our preferred rate, and it'll say ultimate preferred, smoker, non-smoker. So you'll have your ultimate, your best rate smoker or non-smoker, and then you'll have your standard rate smoker or non-smoker. The standard rate is where all diabetics used to end up, and that's about a 20 to 30% uptick in premium. So we changed that to where if you're sitting there talking to someone who controls their diabetes with either diet or oral medications such as glipizide, metformin, glucophage, Actose, something like that, they still get preferred rates as long as they have controlled readings. And so diabetics who are not on insulin, which are controlled by diet or orals, will still and do not have complications like neuropathy, which is the tingling in the hands and the feet, or retinopathy, which is eye damage, or kidney damage, will get our ultimate rate. Diabetics who are controlled on insulin with no complications will be issued at the standard rate. If they have complications, then that's going to be a decline. And if you look at the bottom, controlled means an A1C level of less than 7, or an average fasting blood sugar less than 120. These things never used to mean that much to me until about 6 weeks ago. My A1C was 13.1, and my fasting blood sugar came in at about 310. I thought I was having a stroke. I was actually having a problem with diabetes. So I would now be in the uncontrolled situation because I haven't had my diabetes long enough to tell whether my A1C is going to come down. It's kind of complicated because I'm thinking I'm 5'10", I weigh 175 pounds, I never smoked a cigarette in my life. I walk 3 miles 4 days a week. How did this happen? I don't know, but it did. So dig in, make sure that their diabetes is controlled, and that way you can give a lot of the people you're talking to the ultimate rate. Now, one last thing, and then I'll move on. If you look at most companies' applications, it simply says, if you're taking more than 50 units of insulin, do not submit. Okay. We have had guys and gals place insulin-dependent diabetics that are taking 70 and 80 units of insulin. On my question, on 6 and 7 back on the app, when I go back to that, it doesn't mean that's a knockout. 6 and 7 are not knockouts. That just means you've got to charge additional premium. So if you got a diabetic that's maybe paying $250 a month, and they're taking insulin, say they're taking 80 units of insulin, but they're absolutely having no problems, their height and weight's good, they monitor that, they take care of themselves, you don't have to be the cheapest thing on the block. All you got to do is be cheaper than $250, and you can help that person put that piece of business out there. So if you have any questions on that, by all means, ask those later, and we will try to address those if we have time. If not, we'll make time on another venue. Okay, so then they're going to ask for the medications, the authorization to do the prescription drug background check. While we're verifying their prescriptions, we're also going to continue the interview by getting their doctor's name, address, zip code. While we ask, we verify. Guys, I've got a little cheat sheet that I'll show you here shortly that will really, really make this process smoother for you and your insureds. Cheat sheet's not made to get you, a leg up on the underwriting department and squeeze a piece of business through that shouldn't have went through. It's a cheat sheet to help you have your client prepared so that they can answer these questions when we ask them. Okay, so while we're asking those, we're verifying that, and then we're going to move right into the payment authorization for the bank draft. We'll get the exact premium. We're going to get the bank routing number. The underwriting department is very good at moving your client through that check to get to the correct information. They'll tell them to look at the lower left-hand corner to give them the bank routing number. It's a 9-digit number. And then they'll ask for the account number when they'll make sure that they don't give them the check number. Now, here's kind of how the conversation goes once the underwriter gets to the exact premium. They'll verify that premium with your client on the phone. And the conversation will kind of go now, Ms. Jones, your premium is going to be $150 a month. Now, we are going to draft that in the next couple of days. Is that okay? So she's telling her the premium, telling her when we're going to draft, and getting permission to do that. If your client says no, that's no problem. We'll go ahead and proceed. If your client says something, well, I've had a lot of extra expense this week, this month. Could you wait and not draft my account until the 5th of the month because that's when my Social Security goes. It goes in about the 3rd, so could you draft it on the 5th? We will do that, and they will verify that, and everything's digitally recorded. So if we make a mistake and go ahead and draft her bank account, cause her an overdraft, we'll go listen to the tape. If we screwed it up, I guarantee you we'll pay the overdraft charges. Now, that don't happen. I'm just saying if that happens, everything is recorded, so we can always go back and verify before we make a decision. And if there's ever an issue on that, they usually get my 2 cents worth for what it's worth to help resolve that issue. Okay, then they will select and re-verify that bank draft, and then they will do a recording and tell your client that they're going to do a voice verification of your client as a verbal signature. And they'll ask if that's okay. Once they verify that, they will tell that client to say, Ms. Jones, go ahead and hand the phone back to your agent. Now, guys, gals, listen to what I'm about to tell you because this is huge. Once that phone comes back to me, I never, ever make a phone call on their telephone unless I check to make sure it has a speaker button on it. If it does not, I'm going to use my iPhone because I have speaker capability. And what's about to be talked about now between me and the underwriter is the way you eliminate buyer's remorse. So the underwriter say I have Jose or Linda on the phone, and they come back to me and they say, okay, Bill, policy's approved. The effective date's going to be 10/1 of 13. Here's your policy number, 2896344, and your policy will go into effect on 10/1. Now, why would I want my client to hear that? Because when I leave, as I disclosed earlier, when I leave that house, I don't want her worrying about any of these things. I don't want her wondering about any of these things. So I'm at this point going to read this back to the underwriter. I'm going to say, okay, say, Jose, now, the policy number is 2896344. Is that right? He'll verify that. And my client's listening to it. And I'll say, now, I'll add a little stuff. I said, now, there's no waiting period for pre-existing conditions. Is that right? That's correct. And I have an effective date of 10/1 of this year, correct? That's right. Okay, Jose, I really appreciate it. Take care, and thanks for the help. The underwriter will drop off the call. At that point, if I'm kitchen table selling, which is what we're talking about here right now, I hang up, and I tell my client at this point to grab that ID card of XYZ company. Let's call them, and then let's cancel your other plan. We don't want a double draft. We're close to the end of the month. So you see where that's important, and you see how that can help you and me as agents to eliminate buyer's remorse. We don't have any wonders after we leave the house, because anytime you or I or anybody else buys something, we start questioning whether we should have done it or not. So this is a huge tool to have in your portfolio to use to your advantage. Okay, policy gets issued, the sale's complete, and you are moving on to your next opportunity. Now, I am really going to move through this because it's almost identical. The steps are the same. You call the underwriting department, we complete the application, the policy gets issued, and the process is the same as the kitchen table. The only thing different is you're going to do a three-way phone call, and you will be on the phone the entire call. You actually get to hear the conversation between the underwriting department and your insured. So you got to be quiet. You can't coach. You can help with certain things, like maybe you have somebody that doesn't hear well, and you can say, well, Mary, what they're asking is for your Medicare Part B, your Medicare Part B effective date on your red, white, and blue Medicare card. You can do stuff like that, but what you cannot do is answer any health questions or repeat any of that. When it comes to health questions or medications where HIPAA's involved, you got to be quiet and let the client do that themselves. Okay, so very important that you and I do our job as selling the plan before we call that tele-underwriting department. It's not their job. They're not licensed agents like us. They cannot tell the benefits of the policy. That is something that you and I should do before we call. We want them to be insured, know what they're buying, and that will helps get you through a lot of tough situations. So anyway, we spent thousands on this. We're all in, as you can see. This is kind of a repeat, so I'm going to move right along. But here's the cheat sheet that I will get out to you guys if you want it. And basically, you can kind of see why this is a very beneficial sheet. You got to prepare the client. If we ask for their Social Security number and they don't know it and they have to go get it, that's going to slow the process down. Then if we ask the Medicare number and they don't know it and they said, well, I should have got that while I was there. Then we ask about banking information. Well, my checkbook's in my purse. I'll be back. Or if we ask about medications and those are in the kitchen, I'll be back. And then we ask doctor's information. They say, well, let me get the phone book. This is something that's going to happen every time we do a underwritten application. Make sure your clients are aware of it. Make sure it's readily available. The process will speed up. The process will be a lot smoother for you and the insured. So again, we can get that out to you if you need it. So, and I'm sure you will. The replacement form, you can fax that if you're doing kitchen table selling. As soon as you get that policy number read to you, sign and date the replacement form, have the client sign and date it, and then you can fax it right into 888-352-5126, or you can upload it on our website. There's an upload feature on our website, and I always write the policy number if I'm kitchen table selling on there. Now, if I am doing a three-way telephone call to where I'm in Missouri, the client's in Kansas, and the underwriting department's in Utah, a little bit different on the replacement form. If you want us to mail that policy directly to the client, we will do that. However, this is why I like in these situations to have it come directly to me. At that point, I can get it, call the client and say, hey, Ms. Jones, I got your policy. By the way, there's a replacement form I need you to sign. I've already signed and dated it. All I need for you to do is take it loose from the envelope that it's attached to and stick it in the envelope after you sign it and just mail it back in the postage paid envelope. That's the way I like to do it. If you have us mail that policy directly from the home office, once that interview is complete, to your insured, then we're going to email or hard mail you the replacement form. You have to sign it, date it, get it to your client, and have them mail it back to us. I don't care how you do it, but that's just my preference. Is why I always have it come to me. It gives me a chance to reach out and talk to the client one more time. Okay, remember, it's very important that we don't coach the applicant. And again, this is where these products are available. And at that point, Karen, do you want to ask any questions on that before I move on to the other product that you want to talk about?
Bill, I think we're okay if you want to just keep going.
All right, good. The tele-underwriting hours, I forgot to cover that. We're open 12 hours in every time zone. So on the East Coast, it's 9 a.m. to 9 p.m. So hopefully that will catch you guys during the time that you work. On Fridays, we're open 11 hours. Just a little word of maybe advice. Sometimes when you run a tele-underwriting department, you've got 15 underwriters sitting there, and maybe 2 of them are doing something. And then all of a sudden 50 people call in. That creates a log jam, and there's no way to get around it. So if you're ever on a phone call and you're on hold for what you think's too long, simply hit the menu button there. I think it's number 1, and you can say, hey, this is Bill Ellsworth. My agent number is 140570. I'm sitting here with Patty Higgins in Princeton, Missouri. Her telephone number is 660-748-3873. She wants to apply for our Plan F, and could somebody call her back at 10 o'clock in the morning and complete the underwriting portion of the interview? We will assign an underwriter to that, make sure it happens, and just shoot you an email, let you know whether that individual was insured or declined. So that's another option you have. Or if you're out selling on Saturday and you want to go ahead and get the interview set up, just call in, just leave pertinent information so that we know when to call back. And when you do something like that, make sure your client's aware that we're going to call at that time, because we will make sure that somebody gets them called back. Okay, Equitable information, I'm going to pass on through that. You guys, I'll get that to you later. I want to talk a little bit about our hospital indemnity plan. I think we have one of the best ones on the market, and the reason I say that, not because we pay $300 and somebody else pays $300. There's no difference in the amount of monies that are paid out, but there is a difference in the way we pay claims. And as a salesperson, just like you, there's things that you need to be aware of and things that will be very beneficial to you as far as maintaining a good relationship with your insured people. There are the states that is available. As you can see, Florida is in white. However, got good news if you got people in Florida. Our sister company, which is Heartland National Life, we own both companies. We own Equitable and Heartland, is approved in Florida, and we have this exact same product that I'm going to show you here today available in Florida. Florida is one of our largest states for this product. But we would have to contract you on Heartland National. The process is the same. And so if you have people in Florida, which I think Karen and I talked about that you do, it is available in Florida. Not California at this point, but that's on the drawing board. Okay, I'll tell you a little bit about why we developed this product, where this product fits. Is it an affordable product? What's in it for you and I as agents? And also your client. So the reason this product was developed is because Medicare Advantage, cut and dried. It's that simple. Medicare Advantage also, you know, when we take people out of Part A to Part B of Medicare and put them in Part C, ask ourselves, why do people buy Medicare supplements? Because there's deductibles, there's co-insurances, and there's co-payments on a Medicare supplement. So if we're taking them out of that and into a different portion of the Medicare program, doesn't it make sense to us as salespeople that there's probably also deductibles, co-payments, and co-insurances there also? When MA first hit the market, the out-of-pockets were like $2,400. They're now getting into the $6,000 to $7,000 per person range. So this type of product is really, really catching on, and companies are really writing a lot of this type of premium. So is it affordable in today's economy? Absolutely. I'll give you an example of why I think that's correct here shortly. You take somebody that's on a major medical and paying $450 a month, and you can write them maybe a zero or low-cost MA plan and pick up $60, $70 here and take them from a $2,500 deductible down to where it won't cost them hardly anything if they go in the hospital as far as the deductible, lower their co-payment, and just give them a lot better benefit package by adding this to it. And for $60, $70 a month, they think they're getting a bargain. Or if you have somebody that simply says to me, Bill, my wife and I are a very limited income. We can't keep paying these rate increases under the Medicare supplement policy. We got to do something different. Well, bingo, they're telling you they're going to do something different. Can you help us? Absolutely. Maybe they were paying about $200 a piece for their Medicare supplement. You can write them a low-cost MA plan and walk away from all that premium on the table, or you can add this, make them a better rounded product, and help yourself with the commission side. You can make a few more dollars for you and your family and do your client a service. So that's what's in it for us as agents, completing a portfolio for our client, giving them a more strong benefit package by adding this to the MA plan, and help make a living for you and your family also. And then last but not least, what I'll spend about the last few minutes of this webinar today is tell you how I present the EquiCash product. One of the hardest things for you and I as salespeople when we're cross-selling two policies at one time is how do I get from point A to point B? Got to be some sort of transition. So I sat down, and when this product first came out, and I developed a presentation that if you will run close to what I show you here today, and by the way, again, I'll email all this stuff out to you so you can do what I always call PDR, practice, drill, and rehearse. If you will do that, you will sell this product, I'll almost assure you, 6 out of every 10 times you show it. We got guys that are doing better than that with it when they follow this track on presentation. So we'll get to that shortly, but first things let's look at the product. There's 3 different benefit levels: silver, gold, and platinum. In Florida, it's only gold and platinum. That's the only way we were allowed to file it in Florida. So for today's webinar, we're going to talk a little bit about, or primarily about, how this product gets set apart, no matter whether you write silver, gold, or platinum, but we'll spend a lot of time with this slide on the board. If I were to reach into that screen right now and just flip that brochure over, that's where all the rates are at. It's very easy to figure a rate on this product. I'll show it to you shortly. The silver benefit is a 10-day maximum benefit period for each period of care. Daily benefits start at $100, go as high as $550 increments. And so you can write 100, 150, 200, 250, all the way up to 500. So what do I mean when I say for each period of care? What defines a period of care? A period of care under our program is designed with a 30-day separation in mind. Guaranteed trust, most of the competition is 60 days. So the way that works is if I had this plan and say I had used 5 days of my benefit period, and I got out of the hospital today, if I went back in the hospital before 30 days had passed, I would start out at day 6. If I had used 5 days, got out today, and didn't go back in until December the 1st or November the 1st, 30 days would have passed, and I'd start out at day 1. So 30 days has to separate a discharge to a reentry, and when that does, they start out with a new 10-day benefit period. And that will work that way on the silver, gold, or the platinum. The durable medical equipment, again, this is an indemnity product, so if you sold on the daily hospital, if you sold 500 and the copayment was 250, they're going to get 500. The durable medical equipment the same way. If they leave the hospital and they have to come out with, say, a wheelchair, and the copayment on the MA plan is $100, we're still going to send them a check for $200. The ambulance benefit is $100 per occurrence. Most ambulance copayments are $150. The emergency room benefit is $150. Most copayments on an emergency room MA plan are $65. So you've got about $215 worth of charges. We're going to pay $250. The physician's benefit, or the physician's visit benefit, is a $25 per visit with a $75 calendar year maximum after a hospital stay. When I'm selling this product, I usually carry a highlighter with me. If I forget it, I underline in 4 or 5 black heavy lines for follow-up after a hospital stay so that they realize they don't just show this every time they go to a routine visit, or I highlight for follow-up after a hospital stay. Now, before I go to the optional lump sum cancer benefit, I want to tell you why this product is different than the competition. Let's say that your client is sitting at home and they start having chest pains. And they say, well, I better get to the emergency room. So their spouse drives them to the emergency room. Now, I just described chest pains, and my brochure says $150 per emergency room visit following an accident or injury. Chest pains is not an accident or an injury, it's a sickness. we've been paying for sicknesses. We just got to get the product refiled, the language refiled, but we've been paying for accident, injury, or sickness ever since this product was filed 3 years ago. So if your client goes to the emergency room for a sickness, we're going to pay it. The competition will not. So that's a big difference between the two plans. Let's take that example one more step. Let's say that you're having chest pains and the ambulance comes and gets you because nobody can drive you to the emergency room, and the ambulance takes you to the emergency room. And the conversation in the emergency room goes like this. You know what, Bill, I've run all these tests. I think you're probably having an anxiety attack. I ran EKG. Can find nothing wrong with you. I'm going to go ahead and let you go home. So I was not hospitalized, was I? We're going to pay both those benefits. If you read the brochures on the competition, it says if you were admitted to the hospital, then they will pay those two benefits. We're going to pay them one way or the other. Take it one more step. Let's say it goes like this. The ambulance comes and gets your client. The ambulance goes to the emergency room, and the emergency room, now the conversation goes to, hey, Bill, I think you're okay, but I'm not 100% sure. There's a few things here that concern me. I'm going to go ahead and put you in the hospital overnight, and if you're better tomorrow, I'll probably let you go home tomorrow afternoon. In your client's mind, what are they thinking? I am in the hospital. I am now going to get paid under my hospital indemnity plan. That plan or that bill will not get billed as an inpatient. That bill will be filed to Medicare as a observation stay. Guys, I was just in the Medicare Supplement Conference in Phoenix, and this was a topic of conversation. You can be in an observation unit 3 nights and still not be classified as an inpatient. So let me ask you a question. If that would happen to one of your clients, and they were in the hospital for 2 nights or 3 nights or even 1 night, and they send that claim to, picking on GTL, not because it's not a good product, it's a great product, but you need to know how companies pay claims. And they send that into them, and they send a letter back and say, well, you were in an observation unit and you were not hospitalized. Who do you think the client's going to call first, you or GTL? I assure you, you're going to get a phone call, and they're going to tell you that policy you sold them is not worth the paper it was wrote on, and they're canceling it. And by the way, I sent you to my brother and my sister so they could buy it off of you. I'm going to call them and tell them they need to cancel it also. We have eliminated that for you. We've been paying observation bids ever since this product was filed. I've had countless guys that I've done business with over the years that have written a lot of guarantee trusts, and that's their big concern, is they're getting their claims denied because there's observation units not being paid. We're going to pay them. We don't want you getting that nasty phone call from an insured. You want a happy client because that keeps your business on the books and it keeps residual incomes in your pocket. So, major differences in the way we pay claims versus some of the other plans out there. As vice president of the company, I assure you, even though that does not say there, sickness or accident, I think Karen said that they were recording this. Now you got me on tape. So be it. Anyway, I want to talk about the optional lump sum cancer rider. For the life of me, I do not understand why I see so many of these policies being sold without cancer riders put on there. I'm going to give you some examples here real quick to maybe help you sell this product with the cancer rider on it. I had a client of mine, well, he wasn't a client of mine yet, his mother was, and he wanted me to she wanted me to go see her son, so she had him call me, and he was turning 65, wasn't quite there yet. So I went and I put him on the Coventry PPO, which is an extremely good product here in the Kansas City area, and I started quoting him this product here. And as I got down to, I started at $300 a day. So when I got down to the cancer rider, of course he's seeing the optional lump sum cancer rider, I quoted him the price on the cancer rider, and he said, well, do I have to make my decision on a cancer rider right now? I said, you sure don't. I said, but before you do make that decision, let's talk about a couple of things, and then you make your decision. He agreed to that. I said, here's what I want you to do. I'm a big legal pad person when I sell. I took my legal pad and put the pencil and paper over in his hands, and I said, here's what I want you to do. The cancer rider was going to cost him $29 a month. $2.90 per thousand, and I was quoting him 10. So I said, I want you to write 29 times 12. I got the calculator here. I'll tell you what the answer is. I said, the answer is 348. So he drew 348 down there. I said, now I want you to write out to the side $10,000, and I want you to divide that by 348. And he did that, and I said, the answer is 28.7, so just round that up to 29. And I said, now let me ask you, do you understand what the 29 represents? And he's a pretty sharp guy. He said, well, I'm pretty sure I do. I said, well, let's make sure that we're on the same page. I said, the 29 simply represents how many years you would have to pay the monthly premium on this plan before you would pay more into it than you would get out of it. I said, now, as a man, once you turn 65, you have a 1 in 2 chance of getting cancer sometime between now and your end of life. I said, so do you think at 1 in 2 that there's any chance that you might have cancer sometime in the next 29 years? He said, well, probably, yeah. He said, a lot of my friends have had it. He said, I know countless people's got cancer. I simply closed him with, well, Jason, which was his name. I said, well, Jason, I think this is in your best interest, don't you? He said, you know, I never thought about it. Let's just go ahead and add it. So I walked out of there with a new MA sale. I walked out of there with $68.14 a month on this plan and made a very, very good payday for myself and made a very, very strong benefit package for him. His wife turned 65 about 2 months ago. Guess what I sold her? Same thing. So that's a little way to add this cancer plan to it. Reduce the benefits down to the ridiculous is what we used to always say, and let them see the value of that $29 a month that he was paying for a $10,000 benefit. First diagnosis cancer, he gets checked for $10,000. He can offset co-payments. If he's in the donut hole, that's another thing I always try to bring to the forefront. If you get cancer, a lot of these Tier 4 drugs are specialty drugs, and you're going to pay 33% of them. That's going to move you through the donut hole very rapidly, and you can use some of this benefit here to offset the exposure to the donut hole. So just little ideas that seem to be very effective, and anytime I can help guys and gals sell more of this, I love doing it. Okay, going to move right through the gold and the platinum. The gold is a 20-day benefit plan. You're just going to see a little bit higher benefits in each one of these. We see a lot of the gold come through because of the durable medical equipment's up to $300, the ambulance is $150, the emergency room is $200, and the physician's benefits $25, and you still have your optional lump sum cancer rider. So we see some of that coming in. Don't see a lot of the platinum because it's a 90-day maximum. Of course, as benefits go up, so do premium. As you can see, the durable medical equipment's $400, the ambulance is up. Emergency room's up to $250, and you have your 2 bottom benefits down at the bottom. Okay, so application, extremely simple, name, date of birth on Part 1 on personal. Part 2 is your benefit selection, silver, gold, or platinum. Pick one, daily hospital amount, and then fill in how many dollars worth of cancer insurance you're adding onto it for the lump sum cancer rider. The health questions, yes, no application. Guys, do a good job underwriting this. Make sure you ask the questions, dig in, and get good answers. It is yes, no. We do not do MIB hits. We don't do personal history interviews on that. We are depending on you to be our eyes, ears out there in the field. Every now and then we'll have an agent say, well, I didn't know she was on oxygen. Oh, you didn't see the tank set right next to her, or I didn't know she was confined to that wheelchair. She told me she could get up. So, you know, use common sense, ask the questions, and you won't have any problems. But look down at number 2 real quick. In the past 12 months, go to the letter B as in boy. In the past 12 months, have you been hospitalized 2 or more times or been advised to have surgery that has not yet been completed? So be thorough on that question. You know, if they say, yeah, I have been in there, find out what they're talking about, because a lot of seniors think hospitalization is hospitalization even if they're in the hospital outpatient department. So make sure you get a good answer there and don't shoot yourself in the foot and miss a sale that you could actually submitted. Question 1A is, in the last 2 years, have you had any type of internal cancer? If they say, well, I think it's been a little over 2 years since I had cancer, well, make sure it's been 2 years since their last treatment date. If they took chemotherapy, make sure it was 2 years has passed since the last chemotherapy treatment. If a If they can verify that and give you a good solid answer, check no if it's been more than 2 years since their last chemo treatment. What they can't do then, if it's only been a little over 2 years there, you can't come down and add the lump sum cancer rider where it says answer only if applying for the first occurrence cancer rider. That's a 10-year window there that we go back if they've previously had cancer, when they got to be cancer-free for 10 years. So we'll move right along. The premium payment here, very simple. If it's the payer is the applicant, you don't need to fill out that top portion. Just make sure that you put the initial premium. Let's say that the $25 application fee and the premium add up to $75. Write down $75 in there. If it's a monthly bank draft, do not worry about picking up 2 months, guys. I never do. I pick up one. We won't pin your business. We won't call you on the phone and say, hey, Bill, go pick up that other month's premium before we can issue this. Pick up one. You're good to go, and you won't have any problems. And you only need one check. If it's a situation to where they are, the premium's $50, the policy fee's $25, make out one check for $75 to Equitable Life and Casualty, and you're good to go. If they're doing a bank draft, make sure over on the right-hand side toward the bottom in black letters it says select bank draft day. Let us know what day they want us to draft. Check the I authorize bank draft payments, and if you can, pick up a void check. If not, a lot of times I'll just take a copy of the check they give me and write void on it because it's got the information that I need. Either way will work fine. Now, if you have any special instructions, see to the right hand toward the bottom where it says select bank draft day. There's an open area there where it's solid white. Say that you're sitting there selling this program today, and they say, you know what, Bill, I'm a little short on my funds. Could you not cash that check until the first of the month? Just write right in there, do not cash check until 10/1/13. Let us know what you want. We'll get your business issued the way you want it. But if you leave that blank, we're going to cash it when it comes in. So if you have instructions, let us know. We'll help work with you. Okay, running out of time. This is a scope of appointment form. Been a lot of things in the past where agents have said you can't cross-sell a Medicare Advantage and a hospital indemnity plan at the same appointment, and that is not correct. You can, as long as it is disclosed on the scope of appointment form. And this form here was approved a little over a year ago. I've been using one similar to that ever since 2010. If your compliance, if you remember, your compliance says cross-selling of non-health related items are prohibited. This is a health-related item. You can sell it as long as it is disclosed on that scope. I'm going to get right on past that, and I'm sure you guys are all familiar with these types of CMS guidelines. Okay, it doesn't matter if I sell a new plan or reviewing a current plan. All summary of benefits are laid out the same. Question number 3 is inpatient hospital care. The center column will be how original Medicare works, and on the right-hand column will be for how the plan you're showing works or the plan that you're reviewing works. Now, what I have on the screen in front of you again is the Coventry PPO here in the Kansas City metropolitan area. We use it a lot here, so that's what I use for most of my webinars. And remember, I'm a big legal pad guy, so before I start my presentation, I've got my legal pad out. Over on the left-hand side, I just write you pay, underline it, because I'm going to write some things under that you pay column. So this is going to be the first one. So I'm doing my presentation, and when I say Mr. Jones for covered hospital stays, days 1 through 7, you're going to have to pay $250 co-payments per day. And I say, now, Mr. Jones, what that really means is if you are in the hospital for 7 days, you are responsible for $1,750. At that point, I kind of pause, and I'll say, now, Mr. Jones, don't even worry about that because I'm going to show you why you're not going to have to pay that and how that won't affect you. Now, don't let me forget it, okay? So I'm into my warm-up to my presentation right now. I'm reviewing the summary of benefits, and I'm telling him, here's a lot of money you're going to have to pay, but don't worry about it. I'm going to fix that for you. So I just loaded the first barrel of my shotgun right there. I proceed through that summary of benefits till I come to another benefit under this plan, which is number 14, is the ambulance service. And the ambulance, I'll say, Mr. Jones, if you end up in an ambulance, whether it be air or ground, that's a $150 co-payment. And The ambulance will take you to the emergency room. If you end up in that emergency room, you're going to pay another $65 out of your pocket. And I said again, don't even worry about those two things. I'm going to show you why that's not going to affect you. Just don't let me forget to come back to it, okay? And I move right on through the summary of benefits till I come to number 18, which is durable medical equipment. And at that point, I get my legal pad back out, and I say, now, Mr. Jones, most MAs work this way. You're going to end up paying 20% of any durable medical equipment that you come out of that hospital with. So let me give you an example. Over to the right of my you pay column, I'll write 1,000, and I'll write above that total. And then I'll write approved, and I'll write down $500. And I'll say, now, I'll get him to talk with me. I'll say, now, guess which one of those Medicare says that we should pay 20% of? And he'll usually say, well, probably the lower one. And I'll say, that's right. I take 20% of $500. That's $100. And I put that right below the $65 emergency room copayment. I draw a line under it, and I say, well, right there in that scenario, you're out $2,065. And I move right on through that, and I tell him after this one, don't worry about that again. That's not going to affect you either. And I keep right on going through that summary of benefits until I have been clear through the Tier 1, 2, 3, and 4 drugs, explaining all that to him. And I simply fold that summary of benefits together, and I say to Mr. Jones, that's how your current program works. Do you have any questions? What do you think Mr. Jones is going to ask or repeat back to me? I've already told him 3 or 4 times not to let me forget something. He's going to say, yeah, Billy said you were going to show me how I wasn't going to have to pay a lot of those bills. And I thank him and say, I'm glad you reminded me I was getting ready to do something different. And here is the transition phrase, guys. If you're going to cross-sell, you've got to have a way to get from point A to point B. We started selling Medicare Advantage plans back in 2005. So what I say to him, we actually marketed them in 2005. They didn't go into effect until 2006. So I simply say to him, well, Mr. Jones, when we first started selling Medicare Advantage plans back in 2005 with an effective date of January the 1st, 2006, nobody, including me, sometimes I'll say including yours truly, knew how these benefits are going to be paid. These were new plans, and what we found after a couple of years, our clients were paying a lot of money out of their pocket when certain scenarios took place. So let me just ask you a couple of quick questions. See how easy that is to repeat that little paragraph right there? That's why I say I'll get that out to you, practice it, rehearse it. It works slick as a whistle. Get you from the MA into your now presentation of the EquiCash plan. Now, I have not quite 5 after 2. Somebody look at the clock and tell me how long this is going to take for me to do my presentation, because here's how it goes. Well, Mr. Jones, let me ask you a question. Have you ever been in an ambulance? Doesn't matter if he says yes, doesn't matter if he says no. My response is going to be virtually the same. If he says yes, I'll say, well, Mr. Jones, where did that ambulance take you? If he would have said no, I would have said, well, Mr. Jones, if you were ever in an ambulance, where would they take you? Invariably, guys, they will say to the hospital, almost every time. So when they say to the hospital, I agree with them. I say, that's right, they didn't stop by McDonald's, did they? They took you to what part of the hospital? At that point, they will identify the emergency room, and I will say, now you just triggered 2 co-payments on your Medicare Advantage plan, and I'll point back to my legal pad, the 65 and the 50, or the 150. So then I say to the prospect, I'll say, now, Mr. Jones, one of 2 things is now going to happen while you're in that emergency room. Number 1 is they'll stabilize you and send you home, or what else do you think they might do if they can't stabilize you? He said, well, they're probably going to put me in the hospital, and I agree with him. I said, that's right. They're going to admit you to the hospital, and now that's going to trigger this $250 a day copayment on your Medicare Advantage plan for each day you're there. And Mr. Jones, that's why we created this program. At this point, I flip that over, and this is on the back side of the silver plan. All the rates are laid out there right in front of you, easily to read, and you can start figuring it into where his budget is, whether he's new to Medicare, been paying $400 or $500 a month for premium. You can see if he's 64 years old and paying $500 a month premium, you can write him a $38.03 a month if he's 64, $300 a day, or you can write him a $500 a day for $58.98. And for $26 a month, you can put on a $10,000 cancer rider. That's how easy this plan is to present. It's now 3 minutes after 5 or after 2, so that presentation takes about 5 minutes. So that is all I have if I can get Karen to come back on the phone, I'll take a drink of water. Karen?
I'm here, Bill. Thank you so much for all that information. No questions, but if we get any later on, I will forward on to you, and we can answer them directly.
Sounds great. I do appreciate you guys giving me the opportunity to visit with you. I know I had to talk pretty fast today, but I had a lot of information to cover, and I cut a little bit of the stuff out. But I do thank you so much, and let's see if we can't get together in the near future and figure out how to establish a good relationship.
Wonderful. Thank you, Bill.
You're most welcome, and I'm going to drop off of here. You guys have
Okay.
a great day, and we will talk with you the next time. Bye.
Thanks so much. Bye-bye.